Tshabalala, the Standard Bank Group CEO, the largest lender in Africa by assets, says South Africa is fast losing its competitive advantage to other countries on the continent. He says challenges facing the country are not only a drag to the fiscus, but the economy at large. Newzroom Afrika's business editor, Xolani Mbanjwa, had an extended conversation with him about this.
Inflation reached the target range set by the central bank, and then it's come back to roughly 5.5%. And we think that between now and the next 12 months, it'll stay between 5% and 5.5%. That has got profound implications for people. Things are more expensive. It's more expensive to buy food. Transport costs are higher, and so forth. People then suffer the double burden of paying interest on their loans. Interest rates are high. The interest rates have risen significantly in the last 2 years. But we think that as inflation starts to decline, the authorities will reduce interest rates. We think that next year they will reduce by 1.25%. In that circumstance, many people have been losing jobs. Load shedding has put people under enormous pressure. Many companies have been unable to agree to salary increases. And so it's been really, really tough. There are three dimensions, I guess, to the client base. There are the wealthy who have got good jobs, are getting the benefit of their investment income. But even they are starting to struggle because the increase in investment returns is starting to abate after COVID. You've got middle-income customers who are moving further and further down in the income stream, finding it very, very difficult to pay their installments. And then at the bottom end of the earning capacity of our people, you've got lots of people who are becoming much, much poorer and struggling to meet their obligations and their fortune. It is true, however, Xolani, as a general statement, that the consumer's balance sheet is still better this cycle than it was during other cycles. So the one statistic to look at is debt to disposable income or debt service costs to income. Those ratios are still quite robust. We therefore think that whilst things have been tough this year, they'll continue to be tough into the second year. Going into 2024, things should get better.
What is your take in terms of where we are as a country right now and what is stalling us besides load shedding as an energy crisis on its own?
Let me give you a different and maybe interesting perspective to think about this, Xolani. The world competes for capital. We compete for the money that we need to finance the deficit in our budget, in the country's budget, the budget deficit. And we compete for money with the rest of the world to finance the infrastructure that we need to build. The money that is needed by Eskom, by Transnet, by the Trans-Caledon Water Authority, by municipalities, and by corporates. And when people lend money to a country, the biggest input in the cost of that money is what they call country risk. And you've heard my colleagues speak about the country risk premium. So it's an important dimension to our ability to raise money. Importantly, if money is becoming more and more expensive, it becomes more and more difficult, therefore, to finance the infrastructure that we need for us to be able to meet our people's needs, employ people, and so forth. We are competing then on the continent and in emerging markets with other countries. So the extent to which they've got lower country risk and lower country risk premiums, the returns generated by people who lend them money are greater. The money will then go to those places where the returns are greater and the risk is lower, if that makes sense. Importantly, we are growing at less than 1% in South Africa, is another dimension, whereas other parts of the African continent are growing at 3, 4, 5, 6%. The IMF says that GDP growth on the continent will be about 3.5%. What does this mean? It means we are losing our national competitive advantage. Right? We need to be growing faster so that people get healthier and wealthier, so that greater investment happens, so that there's less social dislocation, so that money is cheaper for us to raise, so that we can invest as a country in our infrastructure. So it's very important that we find ways of growing faster than 1% so that we can raise more money and make more investment. So to repeat, we're growing at 0.8% this year. Other countries on the continent are going to grow faster. Where do you think the money is going to go? It's going to go to the countries that are growing much faster. What is the biggest impediment there? It's the fact that electricity and logistics are a challenge in our country. We resolve those two, the country grows at 3%. We become more competitive. The third one, of course, is crime and corruption. They have a negative impact on country risk, make us more expensive to invest in, and make us less competitive. And those are the three things that I think are at the center of the discussions between the leadership of our country to say, let us find one another on these three issues so that we can increase the competitiveness of our country, so that we can invest in infrastructure, create jobs, and make this country a better place to live.
Your thoughts on BRICS and whether it could actually help to get South Africa out of the rut?
The world, Xolani, is becoming increasingly multipolar. And different associations, as you correctly point out, are positioning themselves in order to be able to improve the ability to move capital, goods, people, and ideas between those various partners. It therefore makes sense for South Africa to look for ways of improving the ability to trade and invest between itself and its partners. So it's a perfectly rational thing to do in a world that is becoming far more complicated and more competitive. But South Africa is not going to succeed in that multipolar world unless and until it improves its ability to build its infrastructure, electricity and logistics. Unless and until it improves its telecoms, therefore accelerating this network industry. Makes it easier for people to get visas so that they can come to South Africa. Makes it easier to move capital in and out of South Africa so that we can be more competitive. So we're competing, as I said to you earlier on, with India, with Brazil, with Kenya, with Tanzania. Even though we may be partners with them, we're competing with them for resources. And the way to be able to compete and partner appropriately is to make sure that you've got your house in order. It makes it easy for you to generate economic activity. So you need electricity so that the motor manufacturers can produce their goods or the miners can produce their goods. You need the rail and the roads to get the goods to the ports. You need the functioning ports to get those goods exported so that you can improve your ratio of exports to imports, which is an important input into economic growth. So my point to you, Xolani, is these are exciting times. It's very important for South Africa to be in partnership with like-minded nations and partners, but it's also important to be competitive. We're competing for resources out there. In that context, competitors are not going to do us favors. We got to get competitive. And competitive in trade and investment means reduce the cost of product and service delivery, make it easier to form companies, make it easier to move money around, make it easier to hire people, make it easier for skills to come into the country and to leave the country and become more competitive.
As the biggest lender by assets in Africa, have you seen the impact of grey listing since we were grey listed earlier this year?
Well, I've made this point to you before, and I've made it in other forums. These matters are, to use an analogy, that death by 1,000 cuts. They all add up. The things that are negative about our country, that have the effect of diminishing our stature, are happening slowly, and they add up. So grey listing is just another one in the list of long list of things that have the impact of diminishing the stature of the country. So grey listing, what impact has it had? It's getting more difficult for us to do correspondent banking. We're getting asked more and more questions. It's more and more complicated for you to do a trade transaction because your correspondent wants you to fill in more forms because their regulators require them to be more careful when they transact with you. It gets more expensive. So you're not going to see it springing out in a GDP number or in an element of GDP. but it's adding to, as I said, death by 1,000 cuts.
What is, from the CEO, your position as the CEO on this issue of independent newspapers? Are the bank accounts going to be closed, and the reasons behind that?
Well, and firstly, we have reverence for the banker-client relationship. The independent newspapers and the group of companies of which they are a part are a client of Standard Bank. And we have respect for the sanctity of contract in our relationship with them. And it is inappropriate for me to speak about them in public. You will have noticed that we do not speak about it, and we do not answer or join in the debate about the appropriateness or inappropriateness of that relationship, other than in the appropriate forums. And I will not do that in this forum either. All I can say to you is that, firstly, we are a business. We're in the business of making money. Do you think that we would deliberately terminate arrangements and lose money in the context of a business trying to make money unless we have good reasons to do that, firstly? And then secondly, we have a high regard for the rights of individuals, but we also have got legal duties and legal obligations. And then lastly, Xolani, our explanation is not about reputational risk. If you care to, take an opportunity to read the judgment in the Competition Appeal Court that sets out the reasons for where we've ended up in that scenario. And let me leave it at that it's not appropriate for me to be talking about our clients. We've got a contractual relationship with them. We will have reverence for it. But we've got obligations, and we will stick to those obligations. And I can assure you they're not political.